Silver has done it yet again. It has reached over $51 an ounce for the second time in history, and there may be more volatility coming in the silver market, especially after I report to you what's going on with the refineries. Let's talk about it as we explore. Another amazing day in the silver markets. No smackdown on your Friday yet again. In fact, silver, as I record this video right now, is above $50 an ounce. It very well could close the week above $50 an ounce for the first time in history. It is now sitting at $50.13. That's up $1.07, a 2.19% increase, with the bid price just above $50. It did get above $51 in late overnight trading, $51.17, just 10 cents shy of the all-time high just a couple days ago. Pretty amazing to see silver move in such a way. There's reasons why this is occurring, though. We're going to talk about those. Gold also is up, back above $4,000 again. It is up $32.80 to $4,010.30. What a wild ride for both metals, but silver really has more potential here and for volatility, moving in both directions, by the way, as we navigate what's going on in the market. Right now, what I'm going to be reporting to you later in the video will very much could have an effect for it moving up even higher. The channel is sponsored by Summit Metals, one of the fastest growing bullion dealers out there now. Experience their great customer service and fast shipping by clicking on the link in the description below for Summit Metals. Now, we saw the price rise up to that $51 mark. It was something we've not seen, ever, in nominal terms. Now, adjusted for inflation, silver has a long way to go, but it could head in that direction after what I'm going to be reporting to you today and tomorrow. I've already recorded tomorrow's video, which is going to piggyback this one, so stay tuned for that one. There's just so much to talk about. You're not going to want to miss tomorrow morning's video. It reflects high demand, this surge does, and tight supply. Those are things we've been talking about for a long time on this channel. Silver has gained over 70% this year, outperforming gold's 54% rise. Analysts say this rally is fueled by both safe haven demand and industrial usage. Economic uncertainty is driving investors towards precious metals, and silver is benefiting the most so far, according to the Economic Times. Volatility is expected to remain high. Experts warn that silver can move 1.7 times faster than gold in either direction. Smaller market size and its dual role as a commodity and investor metal make its sharp swings much more likely. So be prepared for the ride, folks. It's going to get crazy, but that's okay. That's why we hold silver. This is why we stack. We stack through these volatile times. And the best way we can survive that volatility is by holding on to your silver, at least for a good majority of it. Yes, you can leverage your stack in your favor for whatever you deem appropriate at the time, but it's always good to have some silver on hand to stack and to hold. Market analysts say the psychological breakout above $50 could attract even more buyers in the short term. Many traders are seeing this level as key resistance point, and crossing it could trigger a wave of technical buying and fresh institutional interest. If momentum continues, silver could potentially challenge its all-time highs near $52 in the coming sessions. And of course, they're reporting different spot price moments, but the Kitco's price is the most accurate. Another driving force behind the rally is a global shift towards safe haven amid uncertainty surrounding the U.S. fiscal policy and record national debt levels. As concerns amount over budget deficits and government borrowing, investors are seeking alternatives to paper assets like bonds and stocks. In this environment, precious metals, especially silver and gold, are regaining favor as stable value soars. The weakened U.S. dollar is also adding to silver strength, although we've not really seen that in the last couple of trading sessions. The dollar index has actually been up. In spite of the strong dollar, gold has done well, and silver too. But now, today, it is down. It is down 0.42% to 98.96. It almost got back up to 100 recently. But the dollar is a losing proposition all around, folks. We know this. because inflation is here. Even when we don't have technical inflation, to how the Fed defines it, 2% is their target. That is still inflation, so loss of value. Silver is a metal that through the long course of time will maintain its value. And boy, is that bearing out to be the case this year and last. And then some. It's operated more like a good investment rather than not. But, it's pretty amazing. Industrial demand continues to surge, giving silver a unique dual advantage. Beyond its appeal as an investment, silver plays a critical role in high-growth sectors like solar, energy, electric vehicles, and advanced electronics. This dual demand profile, both industrial and financial, has helped silver outperform other metals so far in 2025. That's the fundamentals, and we get to the market where the supply remains tight in that market, particularly in major hubs like London and New York, where inventories of deliverable silver have been falling steadily. We've discussed that on this channel many times. London especially is under stress right now, for sure. And in fact, it's a remarkable situation what's going on, and something that's unique, especially with what I'm going to be talking about with refineries here later as well. So keep that in mind. And delays in shipment, refining capacity constraints are creating bottlenecks across the supply chain. This limited availability of physical silver continues to push prices higher. Then we have geopolitical uncertainty, which continues to rear its ugly head, is adding a layer of long-term support. From slowing global growth to tensions in major trade regions, investors are turning to assets perceived as reliable during turbulent times. Silver, being both a store of value and an industrial essential, fits perfectly into this niche. Also, even with the Gaza situation maybe coming to a resolution, that is still not enough to stop the volatility in the markets, because you think about with Israel and Gaza, well, that's not going to have an effect on the supply chain, really, is it? But other areas like Russia, Ukraine, China, Taiwan, and other areas where there is a lot of supply, and especially with the SGE and the SG and the futures, Shanghai Futures Exchange, those are areas where they want to move more silver and gold. And so that's what we're watching as well. But what's above and beyond that, I think, is what's happening with silver refineries. Silver refineries are now sending out notices that they are going to be They are going to stop buying silver now. So they have said it, especially certain types of silver they're not going to be taking. And nobody's buying silver right now, according to one response to another post, that there's stuff with too much of it. There's so much that they're inundated with right now. And it's hard for them to process. They got to process what they have. And a lot of this is according to one person, Hansa Cerny, has said about when refiners stop buying silver, their dysfunction is spreading in the physical market. Multiple large North American refiners have now suspended all silver purchases due to market shutdown conditions over the night. No large refiners are buying right now. And we're seeing the spot price exceed futures. That is causing a backwardation situation. And that refining backlog plus high demand equals a hedge market dysfunction. That's the definition of a broken paper to physical link. And that backwardation, as refiners stop doing it, it creates a distortion in the markets. Physical silver is now commanding a premium. And real metal is greater than paper promises. As we start to see this happening, people are scrambling for the physical right now, especially London. And I'm going to be talking about that in tomorrow's video more in depth. But with this new news of what's happening here, that's going to show you just a further aggravation of what's going on in the market. And, when the physical silver, you either have it or you don't. There is no hedging. There's no tricks that can be done. Just real ounces. Whenever you buy paper variations or futures contracts, margin calls, that type of thing, or what have you, it's really just a matter of what you really are buying. You're buying an exposure to the market itself. ETF specifically, you're exposing yourself to the price of silver, not the actual metal. When you hold the physical, it's very simple. You have an ounce of silver in your hand. You hold it, you own it. It's as simple as that. And it's worth the premium in many cases to do that. we're now benefiting from that if you are a physical silver stacker. So I think that is quite profound, quite amazing, and to me, it's quite liberating that we've got physical in our hands. Refiners won't take it, but coin shops and local coin shops and places like Summit Metals, by the way, who will buy your silver from you, they're buying it and they're taking it, and they're paying a little bit more for it now than they had in the past because of these disruptions. It's got to flow somehow in some way. And so we're starting to see more people buy silver now. There's still people selling it, albeit an understanding, and this is one of the reasons why the refineries aren't taking it. But still, it's something to be said about having physical in your hand and rolling with the market conditions. Let me know what your thoughts are in the comment section down below. Hope you found this video informative, insightful, and educational. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.